Hi there, this is Michael Kramer of Ma Capital. Today is Tuesday, February 25th. It's around 4:15 New York time. So we're not going to have much going on tomorrow, Wednesday the 26th. But Thursday, things are going to really start picking up here in the U.S. We're going to get fourth quarter revisions for GDP. We're looking for 2.3%, no change. And then, of course, we're going to be getting initial jobless claims like we get every Thursday. Again, we'll be watching these continuing claims at 1.869 million to see if they come in revised lower. We have been seeing them come in with revisions and coming in lower, so we'll keep an eye on that and not really expected to see much of a change for this week. And then, of course, Friday, we're going to get the big PCE report. We're looking for core PCE to rise by 0.3% month over month, up from last month's reading of 0.2%. In the meantime, core PCE year over year is expected to rise by 2.6%, down from 2.8%. Month over month on the headline PCE expected to rise by 0.3%, in line with last month, while the year over year metrics expected to come down to 2.5% from 2.6%. And then, of course, next week's going to be a very busy week. We're going to be getting ISM data, services data, and of course the big job report. So just the next week is going to be super busy when it comes to economic data. And so it really comes at another critical moment here for the markets. We're looking at the euro right now. You can see I have my down arrow drawn in. I drew that in actually a couple of days ago. And the reason why I had that was because I'm continuing to watch this 105 and this 105.20 area on the euro. It's been a really tough level of resistance, 1, 2, 3, 4, 5 times. And so, at some point, it's either going to break through to the upside or it's going to start trending lower again. And that may very well come down to what this economic data looks like over the next couple of days. We've seen rates really move lower here in the U.S., but then again, we've been seeing rates moving lower all over the world. And so right now we're waiting to see if the euro is going to break out above this 105.20 area. And that's really going to be the key. I mean, you can see momentum is clearly shifted and moving higher, but at the same time, we haven't been able to see the RSI move above this 60 level on a couple of attempts. So if we get strong data over the next couple of days or hotter than expected PCE report, that could certainly be a reason why we would see the euro potentially move back down again. And again, I think the market to some extent has shifted a little bit too far the other way when it comes to potentially growth slowing down here in the U.S. And so we're just going to have to wait to see how the data comes out over the next couple of days to determine that. But for right now, this is obviously the key level with a breakout potentially resulting in a move up to around 106.20 or so. When we swing over to the pound, you can see it's a very similar look, although we can probably, say that we're trying to break out a little bit more successfully here than the euro. But again, the pound is facing challenges because it has a lot of resistance up between this 127 area and 128 that may struggle. So again, you're seeing some momentum building on the pound rising, but it's got a big area of resistance up in here. And so I think you have to be careful because if you get stuck in this resistance zone and then you start getting stronger U.S. data, you could easily see the pound begin to revert, potentially slip below the 10-day exponential moving average and move back to around 125 and a quarter. You've also seen the Japanese yen strengthening materially versus the dollar. And this is largely because you, again, have seen interest rates here in the U.S. come down, and the spread between U.S. and Japanese 10-year rates and interest rates differentials in general have contracted some, and that's resulting in the yen really strengthening materially versus the dollar. And you can also see here in this case, the yen's at an important inflection point around 149. Clearly, a break of 149 will open the door to much lower levels and will open the door to a much stronger yen. But again, with all the data coming out, I think it might be best to see what the market decides to do. You can certainly make a case that, the RSI is around 30 right now, 2 times. And this is something that may be telling us also that we're a little bit overextended here and we might, see a little bit of a reversion let's say, back up to around this 153 area on the yen. We're seeing copper moving a little bit here later in the day after President Trump ordered a probe into it. For the most part, I mean, from a technical perspective, copper has kind of survived technical support region around 38, around the 38.2% retracement. If, and even if you go off of this level here, we got pretty close to the 61.8% retrace. So it looks like maybe copper can actually start moving higher again. You can see the 10-day exponential moving average. We have cleared above that again. Copper is certainly not nearly as overbought as it had been. And I think copper could probably really start running back up towards this 483 region where the upper Bollinger Band is. You can also see copper bounce right off the 20-day moving average. So at least from a technical setup, it looks like copper could be primed to really start moving higher again, depending on how the market continues to digest this news flow. And then, of course, we have oil, which today looks pretty weak again. Oil trading at the lower end of the Bollinger Band. It's looking like it's getting close to an oversold condition, but not quite yet. Clearly, the 61.8% retracement level was acting as a major level of support. That broke. It then started to act, it looks like, a little bit of resistance. Here's your 20-day moving average. It's certainly turning lower. That's acting as resistance as well. Your 10-day exponential moving average also acting as short-term resistance the last couple of days. You can see we tried to get above it. We weren't able to hold it, and now we're trading back below. So at this point, again, we're watching this $70 a barrel region. I would say $68 to $70 or so. If that holds, then I think that there's a good chance for oil to continue to move higher. And the only reason why I'm thinking bullishly on oil prices is because we had all these opportunities in here to break that region and we weren't able to. And so I would think again that, if we can hold this area, if you're not going to go down, then at some point you have to think you're going to start going higher. And so that's why I'm thinking that oil can potentially still move if you can just continue to hold this region. We'll look at the DAX. Last week we were talking about how overbought and overextended was. You can see right now the 10-day exponential moving average is holding as support. And this, again, last week we were talking about how overextended the DAX was, how we could expect at the very least to move sideways. And that's pretty much what we've gotten. We did have a big pullback on the 19th. But for the most part, we're right now sitting on this 10-day exponential moving average with a gap that needs to be filled at 22,150. I mean, from a Bollinger Band perspective, it looks like, again, we were overbought in here. We've certainly pulled back some. The 20-day moving average isn't really that much below it. There is room for us to obviously go down to the lower end of the Bollinger Band. But at this point, I think we have to just wait and see what happens with this 10-day exponential moving average and then the 20-day right below it. I mean, for the most part, also, it looks like there's some, decent support around 22,128, which is where that gap fill is. And then after that, you're probably talking about a move back down to around 21,310. I mean, and then from the upside, I mean, I think it's fairly obvious that your resistance is somewhere in this 22,900 region. So we have also seen the FTSE moving down. Again, it will be interesting to see what happens now that if copper starts moving up again. Copper and the FTSE have had a really strong relationship. So if we start seeing copper prices moving up again, I think that would probably be bullish for the FTSE. Right now, 87.65 or so, key level of resistance. Support appears to be somewhere around 86.25. A break of 86.25 probably sets up a move back to around 84.50. But again, if copper starts moving higher, I think you'll probably see the FTSE begin to move back up towards that 8,800 level. We're seeing some selling pressure really start to take hold in the Nasdaq. You're really seeing that in the broader indices. We do have Nvidia earnings coming up on Wednesday after the close, and that's going to have a big influence on where this market goes for now. I mean, from a technical perspective, you can clearly see the Nasdaq has now closed below the exponential moving average 3 days in a row. If we can't get back above that level of, if we can't get back above that 10-day exponential moving average, then we have to start thinking that the trend has shifted. You can also see we've broken the 50-day moving average, and we're right now sitting on the lower Bollinger Band. So we've cleared a lot of key technical levels that really could be telling us that there's something else going on here with the Nasdaq. And even when you look at it from a momentum standpoint, you can the RSI right now is testing and pushing potentially to a new low, and that would be telling us that maybe momentum has really shifted, and we are seeing a little bit more of a downtrend forming. Right now, I think you have support around 21,000 or so. If that breaks, then we're talking about the next level of support coming around 20,605. I think you have to watch very closely where one-day volatility is on the VIX going into Nvidia. If you see the one-day VIX get up into this 20 range or so ahead of Nvidia's results tomorrow, you could see the Nasdaq rally pretty significantly after the results pass, even if the company doesn't deliver the greatest results, just because we have that event risk that passes and those hedges will come off. It's just something that I think you should be aware of if we get one of these mysterious rallies that follow Nvidia's results. But in the meantime, if you break 20,900, I think, again, you have support somewhere around 20,400 with a gap to fill down here at 20,200, which, of course, was the day following the election. When we look at the S&P 500, very similar sort of setup right now. Very similar setup when it comes to the different moving averages. Here you can see the lower Bollinger Band. I mean, the only thing that we can really take away from this is that the market isn't oversold here. Yes, you're hitting the lower Bollinger Band, but the RSI is up around 40. Yes, momentum is clearly shifting lower, and it certainly looks like that the S&P could move lower. But really, again, that big level of support comes around 5,900. You can see this was a big level when we gapped over it. We came near it back on the 3rd. We tested it again today. So really, until 5,900 breaks, that's your kind of key level. If that breaks, then we're talking about moving back into the low 5,800s. And then after that, we're talking about significantly lower levels. But until that really breaks, I think you have to be aware of the risk of this snapback move following Nvidia's results, which could potentially easily take us back up towards 6,100, depending upon how high implied volatility gets bid up into these results tomorrow. Finally, when you look at the Dow, it's very similar, below all the moving averages that matter, also sitting on the lower Bollinger Band. Nvidia now is in the Dow, so obviously that could play a factor in the Dow as well, although the weighting and the importance in the Dow isn't quite as much as what it is in some of the other indices. But just like the others, you can see we're sitting on support right now around 43,300. A break of support sets up a return to this 42,500 region. Clearly, momentum has shifted lower. Again, there is still that opportunity for us to potentially move higher towards the end of the week, even with the potential all the way move back up into this 44,750 region following these results. So I think you just have to be careful with these U.S. indices over the next couple of days. There's going to be a lot of news the rest of this week, and there's going to even be more news next week. And we're also going to be having Jay Powell talk by next Friday as well. So just a lot of things that are going on here, a lot of things for the market to digest. So I think you can't be overly bearish at this point. And if you're bullish, I think you just have to be careful. Anyway, have a great rest of your week, and we'll see you next. Bye.